Good morning, Bitcoiners. Hello, and welcome back to another edition of your economic calendar. I'm Mauricio Di Bartolomeo, co-founder of Ledn, and as with every week, we bring you the news and analysis you need to start the week off right in Bitcoin. Today is Tuesday, February 1st, and we have an action-packed episode for you this week, as always. In today's show, we're going to start by talking about Microstrategies, who fresh off the press this morning just announced that they had bought the dip yet again. We're going to break down the purchase details and what insights we can draw from them going forward. Second, we're going to look at the state of Arizona, where a bill has been introduced last week to potentially make Bitcoin legal tender. We're going to break down the bill itself and what it needs to go through to potentially make it into law. And last but certainly not least, we're going to touch on the S&P 500, which last week traded or saw the highest number of contracts traded in its history. And that was a lot to do, or that had a lot to do with the Fed's statements and comments from last week. So lots to cover. Grab your coffees, everyone. It's going to be a great one. And starting as we usually do with Bitcoin, we see that after dropping to a low of below $33,000 last Tuesday, Bitcoin has rallied. We're just going to show you exactly how much. Bitcoin has rallied essentially around 18% since the lows on Tuesday and is currently trading at around $38,300 as of this morning. Now, much of the volatility that we saw last week in Bitcoin and markets in general can be attributed to macro conditions like the Federal Reserve's FOMC statement. As we saw, equity markets were also rocked with volatility last week. Here's the S&P 500 chart. Massive weekly drop, and again, a big swing down last week and making a recovery. But as we see, just a lot of volatility all the way across. Looking at some Bitcoin specific news that step kind of outside of the macro realm, last week we saw that the SEC had rejected the a recent Bitcoin ETF spot proposal by Fidelity. And this is the headline that you have or that broke around the news last week. And as we've covered here in the past, the SEC still has to issue a decision on the Grayscale Bitcoin Trust, GBTC, before February 6th, actually. So at some point this week, we could expect to hear news from the SEC around the GBTC decision. However, the GBTC fund is currently trading at near record discounts from the net asset value that the fund holds. We're going to put that graph here shortly. And as you can see here, the discount to the net asset value of the fund relative to the price of the shares is near record levels right now at a discount of 25% as of this morning. This suggests that investors believe there's a low chance of GBTC being approved into becoming an ETF this week. Just because, as we've seen, as investors believe these chances get better, usually this discount tends to narrow and become or come closer to parity. We're seeing that's not occurring right now. So as we said, that being said, do keep an eye out for potentially the news of the GBTC decision. And now, while the markets seem to be expecting a rejection, it could still cause some unfavorable headlines or potentially some volatility in Bitcoin markets when the news does hit the wire. Elsewhere, outside of the GBTC, on the regulatory front, there were some very interesting developments out of the US. And here is one of the headlines that you have that broke last week. And that was essentially mentioning or recapping that the news that broke last week was that the Biden administration is preparing to issue an executive action that would task federal agencies with regulating digital assets such as Bitcoin. And this would be as a matter of national security. Now, while the executive order has still not been released, sources close to the matter, as mentioned in the reports, expect that a memorandum could come out in the next few weeks. So there's a good chance that whatever shape that takes, it would introduce some volatility into the crypto markets. So important to keep that out in mind. Now, shortly after this news broke out, there was another news that broke out, which was that the a state senator a state senator in the state of Arizona had introduced a bill to make Bitcoin legal tender in the state. Now, and this is the headline you have around that news from last week from CoinDesk. Now, the bill still needs to be approved by the state House and the state Senate before it gets signed into law. And it is still questionable whether a law like this could come into effect, given that the U.S. Constitution does not allow for individual states to create their own legal tender. So it'll be a fascinating journey to watch this bill progress. Now, looking at other Bitcoin market fundamentals, and for this, we're going to pop out the options flow for today and yesterday. Actually, yesterday, this is today's option flow, but it essentially is somewhat similar to yesterday's. On yesterday's option flow, we saw a lot more puts being sold than bought, and we still see some of that this morning. There's a lot more puts being sold than bought. Yesterday, we saw more calls being bought, an even number actually of calls being bought than sold. This morning, we're seeing a lot more calls being sold than bought. So this is a mixed, we could call this options flow mix. We have essentially some optimism on the put side of things because we have more contracts being sold than bought. But on the call side of things, we have a lot more calls being sold than bought. So mixed signals here out of the options flow from Monday and Tuesday. Now, interestingly, elsewhere, the perpetual futures rates, even though prices have rallied significantly from the recent lows, we still see some perpetual futures funding rates, for instance, like this one from Kraken, that is in negative territory as Bitcoin price rallies. This could imply that leveraged traders are now looking for further downside, and they could get squeezed on the way up if the tides turn, because now leverage seems to be getting piled on to the short side of things and not to the long side of things. Looking back at other clues on this front, short interest on Bitfinex, which we have covered here, is coming down. We see it come down last week, and it's come down so far this week, but it remains quite elevated. In fact, it remains double, more than double where it was, in November of last year. So interesting to keep this in mind. As the price has rallied, the short interest has not necessarily come down as dramatically as it does other times. Now, the other news that broke this morning, and this one's hot off the press, literally just a few hours this morning, a few hours ago this was announced, and that was that Microstrategy, Michael Saylor's company, announced that it had bought an additional 660 Bitcoins for around $25 million, and this happened between December 30th and January 31st, so throughout the month of January. The average purchase price for this round of purchases was $37,865, and the purchase now makes MicroStrategy, the entire amount of Bitcoin that MicroStrategy holds is now up to 125,051 Bitcoin, and that is held at an average purchase price of $30,200. So that MicroStrategy support line that we had been tracking at around the 29,800 level has now bumped up a little bit to 30,200. So it's a quiet week in terms of Fed activity and inflation data, but we do have a slew of corporate earnings ahead. More on this in our What's Ahead section today. Moving over to our analysis of the S&P 500 and equity markets, we see that it was a volatile week of heavy volumes in trading for equity markets. The S&P, after being down more than 3.5% last week, rallied back to close the week higher by 82 basis points on Friday. And this is the weekly candle we have from last week after a massive 6% drop the prior week. This week, we seem to be rallying already. We're in the green to the tune of 1.62% on the S&P 500, somewhat light volume so far this week relative to the previous one. On the topic of volume, we see here this massive spike, this massive green candle spike, and just for historic purposes, we're going to go back and look at just how incredibly large this volume line, this volume spike is for last week's traded volume. And we see that this actually signifies that it was the highest trading volume in the S&P 500 contracts in more than 20 years. Now, looking back at the chart, and if we look at some patterns, historical patterns on the S&P 500, let me just bring down this arrow down here so we can get closer to the actual volume line. So as we can see here, looking back in history at the S&P 500 chart, we see that last week's candle, and candle is essentially this shape, this little green shape that gets formed based on price action. That candle has some actual, quite a few similarities with some previous ones. And the ones that we wanted to highlight are the ones that are highlighted here by this blue circle and accompanied by this blue arrow at the bottom. Interestingly, in previous trend changing weeks, and these were weeks where we were going in a certain direction, but the trend seemed to have reversed and the prices seem to have changed directions after that week. We see that we have seen high traded volumes. So again, looking at the volume here that we traded last week and looking at the volumes that were traded in this instance, as well as this instance in December 2018, as well as here in November 2016, we see that these trend-changing weeks have had very high traded volumes and price recoveries after making new lows. So judging by, again, this seems encouraging, looking at the shape and price action from last week and comparing that to some historical trend reversal weeks back in S&P's history. Now, judging by how markets reacted to the Fed's announcement, it seems as though the Fed's plans to raise interest rates in March had been mostly priced in. As the Fed did not present any new surprises to their plans, the markets was able to find some relief, at least it has been until now. Now, there was a fascinating chart on the topic of Fed policy. There was a fascinating chart over the weekend that compares interest rates forecasts versus the actual funds rate, the interest rates over time. And here is the chart that we are making reference to, and it's courtesy of Bank of America Global Research and Bloomberg. And the chart can be best summarized as even a broken clock can be right twice a day. As we can see here, most forecasts trying to predict the overnight interest rate have been largely unsuccessful over time. With the Fed and inflation out of the equation for a few days, the market will likely be able to focus its attention back on U.S. corporate earnings. So far, 77% of companies that have reported are beating estimates for the fourth quarter, and they are reporting earnings that are about 4% above expectations. This is a pretty encouraging sign in terms of the shape of U.S. corporations, the financial shape of U.S. corporations. In terms of earnings, this week we get to hear from the likes of Alphabet, which is Google, Meta Platforms, which is Facebook, and Amazon, and a few others. More details around this in our What's Ahead section later today. Now, one more thing we wanted to highlight in this section is that while price action on the S&P 500 looks encouraging, it is important to note that the VIX, which tracks the volatility of S&P 500 contracts, still remains elevated relative to historical levels. And so here we're going to pop out the VIX. And as you can see, historically it trades at around 16, 17 over the last year. And it's currently at a 24 price, which is quite significant in terms of where it is historically. Additional to that, we saw that there was a news that broke last week that highlights that essentially the number of put contracts, and these are contracts that look to protect for further downside, that are being traded on ETF indexes has reached a historical high in terms of notional volume traded. So this means that more people than ever are looking to buy protection for ETF indexes. Said differently, there are still quite a few investors that are looking to protect against further downside. So things to keep in mind as we go through the week. Moving over to our gold analysis, we saw that last week gold printed a loss as it dropped 2.36%, below that, right above actually that $1,800 per ounce mark. And this happened as a result of markets essentially digesting the Fed speech, as did other markets. Now, looking at the dollar index, which we know impacts the the price of gold. I'm just going to pop it up here. So looking at the dollar index, we see that the index, if we look at the monthly, it actually rallied by more than 1% on the month of January. And if we look at the monthly on gold, we see that it did just the opposite. It dropped by 1.78% for the month. This was after a big rally in December where it rose 3.11%. For context, even though gold dropped 1.78% in the month of January, the S&P 500 dropped more than 5.5% in the same month, and Bitcoin dropped more than 16% on the same month. So there is, gold is, proving that it can be a stable asset in times of turmoil. So interestingly, on this point, there was a news that was that circulated last week, essentially saying that Goldman Sachs is becoming more bullish on gold, raising its 12-month price forecast for gold to $2,150 from its previous target of $2,000. Interestingly, there was another headline that out of UBS, a different bank, that is bearish on gold, stating that the dollar could get stronger, and this could put headwinds on gold during 2022. And they recently introduced a price target for gold of $1,600 an ounce. So as the Fed prepares to end asset purchases in May, gold investors may continue to sit tight and wait for Fed signals before it goes on to make its new move. A lot will depend on when and how these interest rate hikes occur throughout the year. So again, gold prices will likely continue to be subject to whatever the dollar does and inflation, as well as interest rates on the U.S. Treasury bonds. And moving over to our analysis of the DeFi space, it was a relatively quiet week in the world of DeFi in terms of news. Price-wise, we saw the DeFi index was able to find some footing as last week, as did others. And this week so far, it has rallied actually 7.82% as of the time of this video, as have, again, other markets. The biggest news that could impact the DeFi space is the fact that the Biden administration, as we covered in the Bitcoin section, is allegedly preparing a memo to task federal regulators with regulating the crypto industry. Now, while this has not yet been confirmed, it may cause headwinds in the weeks ahead as investors await further details that could impact this sector. Last week, we also saw the news that there was a DeFi platform called Qubit, which had suffered an $80 million hack. 1 second, we're just going to pop up that news. So this is the news around the Qubit hack. So as we see here, the hack was for $80 million on the Qubit protocol. And it's a protocol that works on the Binance Smart Chain network. And it appears to be the 7th largest hack in DeFi history. The platform held over $730 million in total value locked at its peak, based on some of the reports that we are seeing. Another interesting report that came out of the DeFi space last week was occurred when it was found out that the pseudonymous founder of a DeFi project was revealed to be a former Quadriga executive. As you know, Quadriga is the exchange that went down in Canada and had a lot of mismanagement when that occurred. And so when this news broke, there was a lot of turmoil around the DeFi protocol that this person was involved with. So much so that it appears that there are discussions to wind down the project entirely. Wonderland is a DeFi project on the Avalanche protocol that was bidding to create a stablecoin. As we mentioned, project has been in turmoil since the news broke, and there are rumors or discussions that it could be wound down. So always a wild week in this space, and we'll continue to keep you updated here as more news progress or come out. And moving over to our Bitcoin mining section, we saw some very interesting news come out on this part of the industry last week. The headline is on your screen right now, and the news that was most interesting around this space was the fact that last week, Russia's president, Vladimir Putin, made some headlines essentially saying that they would be supportive of regulation for Bitcoin mining and cryptocurrencies in the country. So this is, again, the headline that you see here. The news came 1 week after the Russian central bank proposed a bill that would potentially ban Bitcoin mining and cryptocurrency trading. So it's a very quick change of postures. Putin also asked the central bank to reach an agreement with the country's Ministry of Finance, who had discouraged a complete prohibition of Bitcoin trading and mining in the country. So again, there was a big sort of negative stance, and essentially has then the narrative or the tune has changed dramatically now, encouraging its ministries and other kind of government bodies to collaborate and make this more of a welcoming environment. Interestingly, if we see Russia in terms of its mining capacity, it actually rose last year to the third place of countries with the highest hash rate after the Chinese mining ban. Russia is now actually home to around 11.2% of the global Bitcoin hashing rate, and this is according to Cambridge's Bitcoin Electricity Consumption Index, and that's the map you have on your screen. Moving or switching gears from east to west, there's been increasing discussion in U.S. states and politicians around Bitcoin, and that doesn't seem to be going anywhere anytime soon. Last week, a Texas governor turned to Bitcoin miners as potential way to bolster the grid and his re-election, and that was Greg Abbott, who made some comments essentially encouraging or asking miners to help him essentially bolster the Texas electrical grid. So this would be really interesting if we continue to see activity by U.S. politicians to draw part of the Bitcoin industry and Bitcoin mining in particular to their states. And so again, just feeding off of what occurred in China earlier last year, it's really one way of saying one man's trash is another man's treasure. We're seeing the other countries like the U.S., El Salvador, even now Russia, try to welcome some of that hash rate that China is so desperately trying to get rid of. And as always, we wrap up with what's ahead for the week. As we mentioned, it's a relatively quiet week in terms of Fed activity and inflation data, but we do have a slew of earnings and some potentially other interesting reports. So on Tuesday today, we get earnings from Alphabet, Google, ExxonMobil, Starbucks, AMD, PayPal, and Electronic Arts. All of these are interesting because they may they do include a potential or have some potential of mentioning Bitcoin in the earnings reports. Tomorrow, Wednesday, we get earnings reports from Meta Platforms, which is formerly Facebook. We also get Qualcomm, the chip maker, and Spotify. Toby there, the CEO of Spotify, recently joined the Coinbase board of directors. So it'll be interesting to see if anything around crypto is mentioned in any of these reports. And lastly, on Thursday, we wrap up with Amazon reporting earnings as well. So it's been a big week. We've covered a lot. Thank you so much for watching or reading. If you enjoyed the show, if you learned something, we welcome you to like it, subscribe to our channel, and share it with your friends. If you don't yet have a Ledn account, I welcome you to check out Ledn.io and learn how you can earn the best interest rates on your USDC and your Bitcoin. We also have the best rates for dollar loans if you have Bitcoin and need liquidity, but don't want to sell your stack. And we also have our brand new Bitcoin mortgage product, which lets you buy a house as big as your stack. Check out Ledn.io for more details. Thank you, everybody, for joining us yet again. We will see you next Tuesday. Have a great week, and see you soon.